Hello there. Lately, I've been seeing a lot of newbie and even experienced traders focusing majorly on the lower time frame to build their buyers. Sometimes the trade will not go in their direction and they'll be surprised. It will not be a surprise to somebody like me because I know whatever you do without taking the higher time frame, you are just riding on a road without a clear visibility. You understand? So today I want to show you how to build your bias from the higher time frame, right? And how to equally use some candlestick to add up as a confirmation, especially candlestick pattern that are formed on the higher time frame. Your liquidity, your demand zone, and your supply zone drawn on the lower time frame is useless except you merge it or you put it in conjunction with the higher time frame bias. So let me show you how this thing works. Like on the daily time and the time frame that you must use to build your bias are the weekly time frame, right? You can use the 1 week time frame. You can use the 1 week time frame. Let me change this to red. Sorry. You can use the 1 week time frame, right? You can use the 1 week time frame. That is 1 week time frame and daily time frame. You understand? Daily time frame. And sometimes even 4 hour time frame for those guys that are scalpers. So these are the time frame you must use to build your bias. Before you trade, you want to come to this platform to build your bias on the higher time frame first. Then let me show you why it is important to do your analysis or build your bias from the lower time frame, right? So if you see, this is NZD USD on our chart. This is NZD USD. You understand? Before the market starts moving to the upside, is an experienced trader must have come to this daily time frame to build a strong bias. Where is the bias? From this candlestick, you can see from this candlestick that formed the last candlestick that closes, which is this particular candlestick, right? This particular inverted hammer. So the basic that we're taught from trading a lesson still work, guys. You understand? The candlestick pattern, the inverted hammer, the spinning top, all the candlestick pattern still works, guys. Even if you are using refined approach to trading or logical approach to trading, which is the liquidity and all of that, you have to sometimes put this thing into consideration. I will show you another candlestick. This is another candlestick that build up on the higher time frame, and when it happened, the price moved to the upside, right? Before now, we all know that the price has been on the bullish trend, higher highs, higher low. But on this particular trade, you see the price stop at this level. You understand? On retracing back, the price stop at this demand level, right? This is the demand level that the price stop at. And again, when the price stop at this demand level, it doesn't just end there. The price gives you a signal, and that signal is this spinning top candle that formed, the last candle that closed, the last bearish candle that closed. And when this candle closes, you can now head to a lower time frame to build your bias. You understand? If you go to lower time frame like 2 hour time frame, let's go to 2 hour time frame now. You will see a clear bias there, right? So this is it. When we notice our inverted hammer, the spinning top candles there on the demand zone, right? This is the demand zone from the daily time frame. Now see a clear picture right here. The order flow have been moving towards the dark side, but on reaching here, we have a liquidity sweep. So we have a liquidity sweep, right? This is the liquidity sweep. We have a liquidity sweep before the price starts moving. And you on the lower time frame, you have seen your liquidity sweep. You will now know that, okay, you can now look for buy. Why some people are looking for sell, you'll be looking for buy because already you have seen your your confirmation from the higher time frame, and you have equally seen your liquidity sweep, which the two of them coupled together give you a stronger bias to buy the market or to long this market. So the moment the market retraces to this little fair value gap right here, you are free to buy the market because you have already built up your bias. So when other people are skeptical about buying the market, you have a good foundation and you have a good reason to buy the market, because from number one, you see your bias clearly from the daily time frame. Number two, you see your liquidity sweep right here. This is the liquidity sweep. The liquidity sweep happened right here. So these are the two confluences that put together that will help you to know when the market is about to change direction. You understand? So that is why it is very important for you to build your bias from the higher time frame, guys. So with this, I think you can trade effectively in the market with the with the higher time frame. So some people will just be trading without looking at the higher time frame. Wake up in the morning and boom, they jump on their platform, jump on their chart without even checking what is happening on the higher time frame. If you have been doing that, you have better have to change if you want to see a good result. Thank you. Peace out for now.